Picture a 24-hour diner. It's like 3 a.m., you're starving, and technically the neon sign says open. But I mean, the chef is exhausted, the coffee's basically sludge, and half the menu is just 86th.
Right, yeah. Just because the door is unlocked doesn't mean it's actually, a good time to get a meal.
Exactly.
Yeah.
So, okay, let's unpack this. Welcome to today's deep dive into Forex market trading hours. Our mission for you today is uncovering why trading Forex without knowing exactly who is pulling the levers on the other side of your screen is, well, it's like making decisions with only half the picture.
Yeah, it's that grand illusion of the 24-hour market, right?
Ah.
We look at Forex and just think of it as this monolithic, always-on machine.
Right, because it technically is always open.
It is, but since it isn't routed through a centralized exchange like equities are, Forex actually runs through a completely decentralized global network of banks and institutions. So because of that architecture, regional business hours completely dictate the market's internal rhythm.
Which means liquidity essentially just chases the sun around the globe.
Exactly. It makes the market behave like a giant relay race across 4 major sessions, and each one carries a totally different institutional personality.
Okay, so take Sydney and Tokyo, for example. Since you already know the schedule, you know these are structurally slower.
Yeah, much slower.
The institutional order flow here heavily favors mean reversion, which makes it an ideal playground for range-based strategies focused on the Aussie dollar, New Zealand dollar, or yen crosses.
But what's fascinating here is what happens the exact moment the baton passes to London. The market gets this collective shock to the system, basically.
Oh, wow, like a sudden wake-up call.
Yeah, European banking volume just floods the network. It completely shifts the dynamic from range-bound to directional. This is where institutional algos are aggressively testing key technical levels.
Right. Hunting stops on pairs like the euro or the British pound against the US dollar.
Exactly.
Now, here's where it gets really interesting, I think, because the entire trading space obsesses over the session overlaps, specifically London and New York.
Oh, absolutely. It's the highest volume of the day.
But I want to push back on the standard narrative here for a second. Doesn't that massive injection of simultaneous liquidity mean retail traders are just, walking straight into an institutional meat grinder?
That is a very fair point.
Like, is that high volume environment actually safer for a retail momentum strategy, or is it just infinitely more dangerous?
Well, it's a double-edged sword, really. It comes down to the mechanics of liquidity versus volatility. When the two largest financial centers overlap, you get this massive liquidity that creates the tightest possible spreads.
Meaning your execution costs plummet.
Right. However, the volatility spikes because you have competing institutional orders, like the London fix just hitting the tape all at once.
Wait, really? So it's cheaper to trade, but way more chaotic.
Exactly. If your strategy relies on momentum, you absolutely need that directional force to hit your profit targets. But you are undoubtedly trading in the most hostile, predator-heavy environment of the day.
Which perfectly explains why your strategy has to evolve with the clock on the wall. You can't just run a slow Asian session algorithm into the teeth of the New York overlap.
No, you definitely can't.
But the danger of a strategy timing mismatch isn't just about losing trades, is it? It's about the hidden costs. Like if you force a momentum strategy during the Asian session, you aren't just facing flat price action.
Yeah, you're paying significantly wider spreads for terrible execution. If we connect this to the bigger picture, one of the most fatal flaws you can make is copying a winning strategy without copying its specific timing context.
Oh, that makes so much sense.
Right. A breakout setup that captures huge pips during London Open will just trigger false breakouts and chop you to pieces at, 2 a.m. Eastern.
And that includes failing to adjust for daylight saving time shifts, right? Those literally alter the start times of these overlap windows twice a year.
Yeah, completely misaligning automated systems if you aren't paying attention.
Even if you are totally hands-off, like utilizing passive copy trading or PMM solutions through brokers like Monaxa, you aren't immune to this. You still have to audit the underlying strategy of the master trader you're copying.
Absolutely. The liquidity of the hour dictates the execution quality of the trade, regardless of who or what algorithm is clicking the button.
If their algorithm is optimized for rapid London breakouts, but your account settings or your broker's server time execute those copy trades with a slight lag during peak overlap, that slippage completely destroys your edge.
Yeah, exactly. The master trader might win, but you lose. You're always at the mercy of the prevailing market conditions.
So what does this all mean for you listening? It means that while Forex might reward access, letting you log in at any hour of the day or night, It rewards timing so much more.
Very true. You have to match your currency pairs and your specific momentum strategies to the active institutional players in their home markets.
Right. And this raises an important question for you to explore on your own. The data shows that the best session to trade isn't necessarily the most volatile one.
No, it's the one you can trade without fatigue.
Exactly. If your personal biological clock doesn't naturally align with those high liquidity overlaps, are you truly capturing a market edge, or are you just fighting your own exhaustion and making suboptimal decisions?
It really goes right back to your 3 a.m. diner analogy.
Yeah, if you're forcing yourself to sit there eating a stale donut while half asleep just because the door was unlocked, you're not getting a good meal. You might be better off getting some rest and coming back when the fresh coffee is actually brewing.